Hey guys, Eric here, Mr. Fired Up Wealth, and I got another IPO for you today. And in fact, it's dropping tomorrow. You can buy this on the New York Stock Exchange tomorrow. It is Lemonade. It is all about insurance, about disruptive technology, about AI, about chatbots. Should you buy the stock? Stay tuned to find out. All right, guys, hot off the presses, July 1st, 2020, and tomorrow, Lemonade, the so-called insurtech backed by SoftBank Group, will be available to trade on the New York Stock Exchange. And originally it was 11 million shares at $23 to $26. Now it's actually going to be $26 to $28 each, and available tomorrow, July 2nd. And you have to check the time. Usually it's around lunchtime. You'll be able to trade. And then the ticker on this is LMND. It's right here, Lemonade LMND. So there you go. If you're interested in buying this IPO, you will be able to buy it just right through your regular app, whatever you use. You'll be able to buy it tomorrow. So what is this company about? What do they do? What's their strengths? What's their weaknesses? And should you buy the stock? That's what you care about, right? So first of all, the company is attempting to approach the insurance industry the way that companies like CrowdStrike, which I just recently did a video on, and Salesforce. Basically, they're trying to be disruptive software type companies, comparing it to these disruptive cloud companies. So IPO investors, this is important. See Lemonade at less than SoftBank's valuation. So you can read through all this, but basically it's saying that it could raise up to $354 million at the high end of the range, which is valuing the company at up to $1.58 billion, which is actually less than the most recent private valuation, which I thought was interesting. You can read, it's called Our Lemonade Stand. It basically is the founder's letter. It's like a manifesto. I did read through that a little bit. It was really interesting. I didn't read it all. It's pretty long, but you can search the web and find that. What they do is they focused on first-time customers with very few assets. So it says that Lemonade said that 70% of their customers are under the age of 35, so they're younger, and about 90% of the customers were not switching from another insurer. So basically finding people that don't have insurance and trying to get them to sign up. It says companies built on human brokers and claims agents may have strengths, no doubt, but appealing to millennials and Gen Zers is not chief among them. What this is basically saying, they use AI chatbots to actually try to sell insurance versus using humans. So it's saying that the younger generations don't like dealing with salespeople and that they're more prone to buy insurance through a website, through an app, through a chatbot, through AI. So it's a very, very interesting proposition. And these guys have done an amazing job selling the idea. They've got a lot of hype. They do a really, really good job of selling and using these big words and making it very, very fancy. I'm going to get to the flip side of that. So I'm going to show you both sides, the pros and cons to this, and you can make your own decision if you want to buy the stock, but I will give you my opinion later. So social advocacy is built into the business model, and it's a risk factor. So with customers exercising power through social movements like Me Too and Black Lives Matter, essentially what this is, guys, is when you sign up, you're going to assign a charity, and anything that's left over, that money is going to go to the charity. And I'll get to more on a second when I go to the website, and I'll show you more. Private equity management, this is really important too, and then I'm going to go to the website, so just stay tuned. This is saying that SoftBank is going to own 21.8%. So Sequoia Capital, you can see all these names, but there's a lot of institutional ownership, which I think is interesting. It does say, however, Lemonade said that the large stakeholders will not be able to vote with more than 9.9% of the outstanding stock in the company without first getting approval of the New York State Department of Financial Services, which I thought was pretty interesting. So let's take a look at their website. I'm wearing yellow because I figured it would be a yellow website. I'm just joking. I've been on this website for a couple weeks. Their colors are white and this bright pink. It's pretty cool. It's catchy. It looks really, really clean. I'm going to play this video for you really quick. I think it paints a really good story for you. Hold on one second.
Old insurance kind of sucks, but Lemonade is different. When you pay us, we take a small flat fee. The rest goes to covering your stuff. So if something happens, we pay super fast. That's what you get when you have bots instead of brokers and algorithms instead of paperwork. Best part, leftover money goes to nonprofits you care about. Seriously, that's Lemonade. Insurance powered by AI and driven by social good.
Okay, that's about as concise of a it really shows you what they're all about very concisely. And they use, AI and smart bots, social good. They're really doing a great job driving that messaging, and they're really doing a great job pinpointing those younger generations, what they care about, what's important to those folks. So I give them credit for that. Stay tuned though. I'm gonna show the other side of that story as well. So it says home and renters insurance built for the 21st century. Lemonade's amazing coverage protects the stuff you own at home and everywhere else. So I want to go back to this really quick. I wanted to go back really quick and cover this because this is important. Currently, Lemonade only offers renters and homeowners insurance in the United States, along with basically contents and liability insurance in Germany and the Netherlands. Lemonade's strategy is to expand into other insurance products like auto, life, and umbrella policies as their young customer base matures. I would imagine they probably also are going to try to expand that to other countries, but that is important so you understand what they cover. And on their website here, so Maya, it's the same name as my daughter actually, that's their chatbot, and you can actually, it says you can get insurance in 90 seconds and your claims can be paid in 3 minutes. Sounds like a pretty cool story. Renters insurance, $5 a month, as low as $5 a month. And then you've got homeowners insurance as low as $25 a month. And this is just showing if you're already insured, you can switch to Lemonade instantly. So if you're with Farmers, you can save 31%. They're saying Allstate 90%, Geico 10%, et cetera. You can click here and talk to Maya and she'll tell you what's up. This is a really good image here, how Lemonade works. So Lemonade reverses the traditional insurance model. We treat the premiums you pay as if it's your money, not our money. And with Lemonade, everything becomes simple and transparent. We take a flat fee, we pay your claim super fast, and we give back what's left to causes that you care about. What's not to like? So you got a flat fee for everything. We pay the claim super fast. And if there's a slice left, we'll give it to your favorite charity. So it's a great message. What else can we find out about the company? Obviously, we want to know how they earn money. How do these guys earn money? Because the first thing you think is, well, if you're giving money to charity and you're not charging very much as an investor, obviously I want to invest in things that are good for the people and for the planet and all that. But you also want to invest in a company that's going to be profitable and going to give you a return on investment. So, it's one of those things. It's a slippery slope. So how do they make money? So Lemonade makes money by offering and selling renters and homeowner insurance we covered earlier. We kind of covered that part. Renters insurance, $5, homeowners insurance, $25. Okay, so we've got that. So they collect premiums. That's the amount, the money customer pays for his or her insurance, and is used in the following way. 25% fixed fee for Lemonade, and that's used to cover administrative costs, with the surplus being their profit. So that's how they make their profit. 75% is used to fund claims to buy reinsurance, and that part is interesting too because there's more to that story, and cover taxes and fees. The surplus goes to charity of the customer's choice. For comparison, traditional for-profit insurance companies collect 35% premium fees. Due to the vast amount of data Lemonade is able to collect, its algorithms can accurately predict the appropriate level of insurance that one has to pay. Okay, so let's look at the other side of the story. This is from The Real Deal. It's New York Real Estate News. There's a catch. While Lemonade has seen substantial uptick in revenue and a growing suite of products, it doesn't make a profit. And as it gears up for public debut in early July, which is tomorrow, it has no timeline to do so. So that could be a problem. Currently, Lemonade believes it can generate enough cash by selling insurance policies to cover its financial obligations, mainly paying customer claims for the next 12 months. Beyond that, it will have to tap into cash reserves. Furthermore, Lemonade's charitable giving falls well short of what might infer from company statements. Possibly jeopardizing the trust it claims to build with its customers. The company also admits its own claims about behavioral economics are untested. Interesting. Getting squeezed in a down market, again, backed by a bunch of VCs like SoftBank. They have spent aggressively on acquiring new customers. In 2018, it spent twice as much on sales and marketing. Here's where that marketing and sales comes into play. They've done a great job on it, but they've spent a lot of money. So in 2018, it spent twice as much on sales and marketing as it has earned from customers, ending the year with $52 million in losses. In 2019, the sales/earnings ratio improved, but money paid to insurance claims and doubling administrative costs increased its operating loss at $108 million, more than double the previous year. Okay. As a result of the losses, Lemonade says that shares purchased at its target of $24.50, and this is a little bit older than the revised target I showed you earlier, will have a book value of $15, which may signal to some investors the target price is overvalued. Okay, it's even more overvalued maybe now, right? Because what did we say it was? $26 to $28, and this is saying it's possibly $15. So okay. Disappointing valuation side. Lemonade now finds itself selling into a property market. This is really, really, really important. Shocked by furloughs and layoffs, with 61% of its business concentrated in 3 states, California, Texas, and New York. Okay. While the company boasts in its S1 capturing 7% of New York City's rental market, the shockwaves of the coronavirus pandemic has sent vacancy rates to a 14-year high in the city of New York. In Texas, now we've got a resurgent virus cases been spiking. This talks about June 24th. They had 5,589 new cases. So they're just basically saying that Texas is going to have a big new spike. And then cases in California have also surged, peaking June 23rd at 5,793 new cases. Los Angeles County now has the highest number of infections in the nation across the state. A mix of historically low mortgage rates and chronically short housing supply paint a complicated picture. Okay, well, as an investor, this stuff's starting to make me a little bit nervous. And obviously, there might be an agenda to this article, so I'm not saying there's not. But also when I'm reading it, I don't disagree with what they're saying either, right? So in every location, the longer the pandemic drags on, the more term affect the personal earnings. So the longer the pandemic goes on, the more it's going to affect a company like Lemonade. So this next part's saying, having lost $108 million in 2019, it is upside down for Lemonade to name companies like Allstate, basically saying don't even mention Allstate in the same breath because they made $4.8 billion in profits last year. Okay, that's, obviously they're going for a different spin on it, but it is important to look at that. Betting on the algorithms and trust. Lemonade may ultimately not be too eager to disrupt. It is an insurance company after all. For anyone who can steal their eyes away from the piles of cash given to it by SoftBank, Lemonade plays pretty conservatively. Its chief insurance officer hails from Liberty Mutual and McKinsey before that. And instead of paying customer claims itself, it relies on reinsurers, giving them 75% customer premiums off the top. Sacrificing that much premium is more common for companies insuring Ferraris and almond-sized diamonds than 30-year-old $60 insurance plans. It's kind of funny. By using reinsurers, Lemonade has removed the volatility of the weather, say a hurricane destroys all of someone's possessions, as well as the volatility of its own technology. Computer scripts pay 1/3 of the claims made by Lemonade customers instantly, which raises a question: can computers catch a lie? Any uncertainty about that question is a risk. Thank you for subscribing, Earl. In 2018, Lemonade donated 2.7% of its leftover premiums to charity, which is $162K. And last year in 2019, it increased to 3.5%, which was $631,500. So quite a big jump there. It says Lemonade's investors seem to be a generous ones, standing by while their money is given to charity, basically saying the company's not making money and yet they're given to charity. So, I'm not going to really go into that either way. But meanwhile, Lemonade executive salaries totaled $1.5 million in 2019, and total executive compensation came to $6.3 million. Okay. All right. A 10x compared to its charitable giving. So, hey, I'm all for capitalism. But at the same time, you got to be careful. If you're going to invest in a company just because of the whole charitable contribution thing, and they're paying out executives $6.3 million, just take that into consideration is all I would recommend. Okay, last point on this really quick. Another article. These guys are also kind of bashing Lemonade. It's a broker by any other name. Lemonade is a broker by another name. Another of Lemonade's selling points is that insurers have conflict of interest when denying claims. Lemonade is actually 2 companies. I said this earlier, this is important. It is a risk-bearing insurance company and a brokerage firm. When you buy a policy from Lemonade, the 20% fee, and I think there's different percentages depending on but whatever that fee is, it goes immediately to the brokerage firm. The remaining goes to the insurer. The paper on which the insurer is based is a B corporation, which essentially makes it a nonprofit. So it is the brokerage part of the business that is the moneymaker. That is the entity that secured all of the seed funding. That's really interesting, I think. Lastly, I want to challenge the major premise of Lemonade that the insurers make money by denying claims. as a professional in the business for 20 years, so this guy's saying he was in the business for 20 years. I'm sure he was in sales though, so he probably doesn't like the idea of disruption. So take it with a grain of salt, but let's see what the guy has to say. This is one selling point that Lemonade and its marketing keeps touting that upsets me the most. It upsets me because it isn't true. In fact, I've seen the opposite. I've seen emails or communications from senior executives to staff adjusters on site during a national or natural disaster that flat out instructed their adjusters to move quickly, be fair, and if there's any doubt about the damage, settle in favor of the policyholder. I'm not naive enough to believe that insurers never play fast or loose with their claims handling, but by and large, insurance pay their claims. In the property area in which Lemonade competes, these policies they sell are legal contracts. Many a court battle has fought to word the contract, the claims can be settled quickly and fairly. Lemonade is implying that they will be different. They are almost implying that they won't deny claims. Are there really claims that insurers have denied and acknowledged via the court system that Lemonade would not have? I seriously doubt it. Look, I like new things. You like new things. Lemonade is like the new thing on the 300-year-old block. But the shiny new aspects that Lemonade are bringing to the table don't appear worthy of the hype, in my opinion. I give them an A for effort in maximizing the hype to drive attention and sales. But insurance is all about the long game. The real KPIs are retention, combined ratios, and customer satisfaction. Those will take years to sort out. Are they truly in it for the customer? Do they really want to revolutionize the business model? Or is the exit strategy already in place? The world is watching. I hope they succeed. Okay, so what's my take? Am I going to invest in Lemonade IPO tomorrow? The answer to that is probably not. I'm probably not going to. But here's the thing. I think that this is probably going to be one of those stocks that is well received by the younger generation, by the Robinhood crowd. I could see this being even like a YOLO play. So I'm not going to sit here and say that the stock's not going to go up. I'm not going to say don't buy Lemonade, and then it goes up 50%, and you'll be like, oh, that Eric guy doesn't know what he's talking about. So I look at this from a long-term investor. Will I trade this possibly? Yes. I'm going to watch this and I'm going to study the chart, and I'll probably trade it. I'd normally always trade IPOs anyway. What I like to do is I'll watch them. They pop, they drop, you get back in, you ride it up, you sell. That's what I do on almost every. I did that on Fastly over and over again before I went long on Fastly. Fastly was in 2019, made a ton of profit, and then went long at the end of 2019, early 2020. So will I buy the stock? Will I trade the stock? Yes. Will I buy it on the open tomorrow? Probably not, because it's going to pop. Will I trade it? Yes. Should you buy it? That's up to you. Do I think it's a long-term investment? I think it's possibly a long-term investment. I think there's a lot of risk here. For me, I've already made my money in the stock market, and I don't necessarily need to take risks on things I don't fully understand. Insurance is not my forte, and therefore I would not put a 5-year, long play on this. I wouldn't be a long-term investor in this just because it's not my cup of tea. With that said, it might do very well, and I do love the marketing. I love the sales messaging. I love all the different things, that I showed you about the website and how flashy it is and all those different things. But I'll probably trade this stock. I'm not going to go long on it. You might think differently. I tried to give you the information, both the positive and the negative, and you can make your own decision. So I hope this video helps. I appreciate your time and attention. Please subscribe if you haven't done so. Hit the like button, drop me a comment. Check out our Facebook group. Thanks for watching. Have a great rest of your day. Take care.